Good morning, everyone. Let's have a look at your markets for today. We'll start with the economic calendar as always. We've got some really interesting news events today for the euro and for the dollar, obviously. We'll start with the ones we already had. So house price balance for the pound, better than expected, significantly higher. House prices in Britain just soared. It's quite interesting. This is on the back of interest rate drops and everything. That's to stimulate the economy. People have more confidence in buying homes now. The ones that are still employed are all buying homes at the moment, getting home loans, etc. at lower rates. So that's what this is about. The house price balance, that's pretty good for the pound. We've got the euro monetary policy statement and the interest rate decision. Now we know what the interest rate is going to be. It's staying at 0. The monetary policy statement should not deviate from what was mentioned in Jackson Hole. If it does, we could see some movement. If it's the same, there might not be any movement. So we'll have to actually go through the statement at that point and see what it says. On the dollar, we have initial jobless claims. That's always relevant. Jobs is probably the most significant factor for the US at the moment, based, to determine growth and potential inflation. You have to know who's actually in the market, who's actually fueling the economy. So jobless claims quite important. And then we've got the PPI at the same time, and crude oil inventories if you want to trade oil later today. And then the Bank of Canada is a member speaking. So, and the Europe's Central Bank's President Lagarde is going to speak as well at 7 tonight, following obviously this monetary policy statement. So this might not give us any movement, but I'm pretty sure this could. So if you want to stay up, and well, that won't be up for you. It's GMT plus 2. So for the guys in the US, for example, that would probably be around 5-ish or 1-ish even. Could even be around 1 o'clock. I think they're GMT minus 4 or something about 6 hours behind. So that's something for them to watch. I'm not going to watch it. By then I'll be out of the market. I'll have my trades in, stop losses, take profits in, and I'll be leaving it to do what it wants to do. I'll potentially set up maybe a stop order and two stop orders, both sides of a certain currency, and then let it do what it wants to do. Anyway, that being said, that's the economic calendar. We should see some volume today, so that's something to look out for, to look forward to. We'll start with the indices. In the technical summary, we have the S&P up 2%. Interesting. DAX up 2%. FTSE up 1%. Euro up 1.7%. It looks like everyone's getting back into these stocks after the big sell-off. Yeah, I mean, the Australian dollar unfazed by extended COVID restrictions. This is an interesting headline. And this, obviously, we know that the Bank of Canada is sticking to the current policy tools. Yeah, I mean, this is a new. And then this one. Yeah, obviously we're gonna watch this as well. So it's not just them; it's all of us. Gold rebounds as dollar falls. I think that's something to watch as well. Let's check the gold. No, that's neutral. This is neutral. It's not really worth mentioning. I mean, this one's up slightly more, almost 0.8%. So silver seems to be doing okay. it was the 26th, not too long ago, a few days or a week ago. So silver's doing okay, and then this should be neutral, 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 and neutral. Everything is kind of going nowhere. That's okay, we can work with that. So, I mean, everyone's waiting for the euro monetary policy and everything, like they said here, ECB meeting. Everyone's waiting for that, so we'll watch it as well. Let's go to our charts. So just a quick update. Yesterday's trade was a loss. It hit the stop loss level. Let's go to the actual chart. So it's the downside. It stopped at this level where it's at now. I expect to see it consolidate into this triangle and then break out to one direction or the other. So I'm not getting into the market at the moment on this one. It needs to break first. So yeah, I mean, what can you say? You don't get them all right, and I'm happy when it hits my take profit and I only lose like 200 and something. That's not too bad, considering that our wins give us significantly more than that. Okay, so speaking of our wins, we also have another trade open. That's on the dollar CAD. We went short there. You know, remember those little indicators that, oh no, yesterday I did a breakout sell stop and a sell stop and a buy stop, both sides. It hit the sell stop and it kept going. That's how I would have traded the interest rate decision anyway. The move just came way after the fact, so I left them in there for about half an hour and then they started moving. I think they were just waiting to analyze the data or something, but be that as it may, I went short, so I'm in money now, and you can see trade's still open. So when you have a loss of that and you see the opposite trade, you know, at that level, then, you know, there's no reason to panic or be upset about losing a trade. You know, your wins will more than make up for your losses if you stick to the risk-reward ratio rules. That being said, I mean, this could have closed out. I had my take profit there initially where price is at the moment. That was my take profit initially. You'll remember I moved it down based on risk-reward. So I could potentially close this trade out now and I'd still be fine. It's above 1. But I'm going to leave it because I follow the rules. So the rules say take profit, stop loss, or exit rule. Now my exit rule is if you add a 20 moving average Bollinger Band in here, you'll see that more often than not, when price breaks through the middle line, it goes to the opposite band, you know, the upper or the lower. If it breaks through the middle, it goes to the opposite. So breaks through the middle, goes to the opposite. Breaks through the middle, goes to the opposite. You'll see this almost every time. Through the middle, opposite. Goes down through the middle, did not hit the opposite and kept going. This happens sometimes. It's not a golden rule. There's no such thing. But for me, this is consistently happening more times than not. So through the middle, opposite, through the middle, well, it went up first, went down, opposite, went up, opposite, went down, opposite, went up, did not hit it, went down, went up, hit it, kept going, lost momentum, went down, down. So this is what's happening here, for example, is what I expect to see happening here when this goes through that line. So that's my exit rule. I have a take profit, I have a stop loss, and I have an exit rule. So if price goes into this level or through this moving average, I also close out the trade. Now, you could do this many ways. You could just move this there. Yeah. Now it's regardless of what happens, you have a win. So that's $250. We'll move it on every candle because the moving average is going to shift. We'll move it on every candle. We'll move it down, 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 while it's still going down. So on the next candle, this will be wherever the moving average is. And now it's a risk-free trade. We've got the loss there of 277 and a potential win here of 251. I mean, so overall, if it does hit that right now, if it rebounds all the way from here and triggers that, we're still only down about 20 something dollars. I'm not even sure. So this is great. This is the perfect scenario. Exit rule, take profit. Stop loss is no longer way up there, so there's no more risk. We're winning regardless of what is happening here. It's a good trade. So that being said, I just love my little indicator. When there's 3 in a row, you can expect a big move. 3 in a row, big move. It doesn't always work, but more times than not. 3 in a row, big move. I mean, you could have called this move here already. It was trending, went sideways. I wouldn't have traded this. I mean, 1, 2, 3, I would have gotten out there. As I just said, I have an exit rule. So that would have been a break even. That wouldn't have been a loss necessarily, except maybe the spread. I don't know. But that's my exit rule. So 1, 2, 3, exit. So break even. Next one. 1, 2, 3. Didn't touch, didn't touch, didn't touch. Exit. But usually I'll have a specific level where I want to take profit. That would have been on this doji, for example, a value area, fair value price. Let's say there. That doji and those two, some other highs and lows and stuff would create a fair value price there. So I would have taken profit there, which would have been a good trade. It's a pretty nice indicator actually, if you have 3 of them. But as always, not everything is perfect. I mean, there's 1, 2, 3 and it came down, but it's at the middle, so it would have closed out on the same candle. And then 1, 2, 3, it went, didn't touch, went, and then you would have gotten out there or wherever you had your take profit level, potentially at those dojis there. Anyway, that's just me, telling you about how much I enjoy my little indicator. Wrote it myself, so that's why it's a point of pride for me. So anyway, let's go to the market. Let's look at everything. Let's see what we can see. That's the 23 line. You remember we drew this in. Let me draw it in again. That point to this point. It's opposite now. It's fine. We had the 38 and the 50, 61, and that key level there. It broke the 61, went to the key level, key resistance level. So, and then came back. I expect to see this ranging now. Yeah, I mean, it's not really much to do. It's a ranging market. This line and that line, maybe even this line and that line, it's ranging. Not much for me to do. This one, I should see this keep going down, I think. It should keep going down. I mean, potentially not. The Swissy is a safe haven currency, so that's why it would have gone this low. It could potentially rebound. This could be leg 2, then leg 3. But I mean, this should have been leg 1, 2, and then 3. It should keep going down. It should keep going down. But we had a double bottom here, and then it rebounded to the 50. I even called it with a little arrow. We had it rebound to the 50 retracement, then it came down again. Now it can go either way. I mean, this could be a big move. If it goes lower, it might break this. It will definitely retest it if it goes lower. It'll definitely retest this level, but it could potentially just go up now. But we'll keep an eye on it. I think with the Swissy being a reserve currency, the fundamentals say it should go down, but I haven't watched the news yet today, so I don't know what's happening. I don't know if there's some breakthrough in the vaccine or something like that. So I can't make such calls today because I'm not too familiar with the market sentiment and the fundamentals. Okay, so let's see what we can see in this one. Odd yen went up. Yeah, I mean it retraced the initial move almost fully, and now it's right there. I think I'd put a range resistance in there and then wait for the breakout and trade that. Now we spoke about this one staying out because it's consolidating. Odd greenback, I mean same problem, it's back to where it started. So this is fair value. It could go either way. When it's at fair value, you know, wait for it to consolidate, put in sell stop and a buy stop, and then wait for the breakout. That's pretty much what I'll do on that. Okay, so this one I got wrong. 1, 2, 3. So this is an upside down W. You can see it there. Upside down W, which means this could potentially, oh no, this could potentially come back there. But what am I doing? Like I said, oh come on. Like I said, I'm not too familiar with what's happening with the vaccines and stuff, so I could be wrong. Euro, oh no, I can't make this call. I can't, because there's a meeting. So, I mean, expect this to consolidate. And then when the meeting comes out, buy stop, sell stop, either side of it, and trade that. I think the meeting will start a trend. If this consolidates, that's great, and you've got something to trade. Otherwise, you're going to go for the Euro USD one. This will definitely consolidate now. It's already at fair value. So this will definitely consolidate, and then, you know, buy stop, sell stop, wait for the breakout, trade it. Easy. Easy, easy, easy. This one, I mean, Swissy being what it is, it went down. So this one, down being what it is, went up. I think I called this. I told you it needs to come back to median. I can't remember, but anyway, it doesn't matter. It's still going up, even though it looks like it's coming down. It's going up. But this should consolidate to the side until the monetary policy and everything. So again, if it does consolidate, easy trades. Euro yen, same problem. So I'll just do it on this one. You might not see as much movement on this than you would on this, for example. Although the ATR is higher on this one, so I'll do it on this one. Always have a lower spread and stuff, so we'll do it on Euro USD. We'll put buy stop, sell stop, and see if it fills something. Pound dollar, I mean, overall should still go down. It's going to go sideways and then go down, you know, following trends. So if you draw in the trend line from that point and those two, you know, link them all up and ray it, you'll find the next level. Anyway, dollar Swissy, ooh, still coming down. Pressure on the dollar. Swissy is a safe haven. I mean, it's not likely to stop until it reaches this level. Might see a retrace from there. Dollar yen ranging. So we had a breakout there. If you put in the break even, you would have been fine, but I mean, I would have, ooh, no, this is horrible. This is where they catch you, you know. It's a rumor. I don't know if I believe it, but you know, when you see stuff like this, you have to believe it. When everyone's like, I know I've got my stop loss there, and I've got a sell stop there, that when it breaks out, I'm going down, I'm going short. This is definitely going to be a continuation pattern. I'm going short. And then as soon as it triggers everyone's level, you know, price pushes up. So the conspiracy theory is that the major banks look at pending orders that are in the market, and then when they see there's a lot of money lying there, a lot of retail brokers' equity or liquidity lying there for them to use, they'll push the price down, trigger it, and then push the price back up. And it's not hard for them to do. All they do is sell, 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 sell until they get there, and then close all their orders. Close, 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 close. Then they're back there. But when they're there, they're hedging it. So they sell it from there, and then start buying from all the way from there. They start buying, buy, and close their own positions, their sell positions. So it's a hedge, and this goes down. They make money up to there. Trigger all of your sell stops and stop loss levels. If you have a buy order, you know, there might be some stop loss levels there and some sell stops there. They trigger all of them, and then push all the way up, and then just basically until you hit your stop loss level or wherever that may be. Or, you know, if you have, for example, sell limits somewhere here, then they'll stop, then it stops, and then that's what happens with these candles. It's a painful thing to see when you're in the market. I'm glad I wasn't, but this has happened to me. It tends to happen to everyone at some point, so it's unpleasant, but it happens. So it's gone up again. I mean, I think it's ranging. If you don't see it ranging, I'll show you. Look at that level, false breakout, and then this purple level with a false breakout. You know, dollar yen, too many false breakouts. I don't like that. Anyway, so that's what's happening here. We've got, I would short it there and go long there. I wouldn't, if it breaks out, I wouldn't go short. We see too many false breakouts on something that wants to range. But anyway, that's just me. Kiwi yen, it's all over the place, isn't it? I don't know. I mean, I called this. Oh my word. Can I be this good at making calls? I can't believe it. I called this. I remember I said it needs to respect the channel. So when it pushes this crazy, it needs to come back to the opposite line. And that is exactly what it did. And now it's going to consolidate. So you'll see a flag pattern form or whatever. Maybe just start ranging in a channel. And I mean, wow, I called this exactly. This is crazy. But we'll see this consolidate now. That's insane. That's so insane. Yeah, I mean, same thing happened. This is a mirror of that, basically, isn't it? Same thing happened. So I can't believe I called this so accurately. It's insane. Anyway, silver ranging. It's at the upper resistance. If it holds, pushing down again to the lower support called, ooh, went to that resistance. So if that happened, then we could potentially see this one push that level. Come on. We could see it push that level. So yeah, we could long this, but it's risky. It's close to the end. So why would you want to? I wouldn't want to. Yeah, so quite interesting. Gold and silver rebounding off the lows. You know, that low there, rebounding off and going higher. So that could be the trigger that everyone is waiting for to start going long on these commodities again. I mean, there's pressure on just about every currency. We had the yen and the Swissy strengthen because they're safe haven now. Gold is also safe haven. But everyone is worried about that 1800 myth that, you know, price needs to go down to 1800 before it rebounds, or at least 1850 before it rebounds. I don't buy into that. I mean, people don't. I mean, yeah, sure, if a lot of people believe that, then it could happen. But I think more people are holding on. I think people are buying the dips. Every time it goes low enough for them to buy, they're like, oh yeah, this is an opportunity. Let's get in. Let's get in. So they're just buying the dips, waiting for everyone to push it down so they can buy the dips. And this is why you see these crazy moves. You know, it reaches a level, crazy up. Reaches a level, crazy up. Reaches the next level, crazy up. And this tends to just keep happening. And then we get to that level and they take profit again and it comes down. So I don't know. I don't know if we'll see the 1800. We might see it go below 1900, but you know, sky's the limit for gold, and with the markets being what it is, it's still the ultimate safe haven, I think. Especially if you actually own gold, you know, physically own it, you just hold on to it. Why would you not just hold on to it? Get prices of 2000, 2100 or something. What was the previous high? Can't remember. I called the 2100 level. Oh, there we go. No, this is current price. Let's go to the weekly, it's faster. Yeah, so there's the high. I can't really see what the price is. Let's put on this. Just below 2072. I called the 2100 level on this and a high level on the S&P based on the millennials all coming of age and starting to work. They you know, when you start to work, you start to invest as well. So there's a lot more liquidity in the market, so it needs to go somewhere, and it tends to go into gold, and the S&P 500 sees growth as well for the same reason. Now, this was obviously before the whole COVID thing, so I expected, I called the 1800 level, I called about September last year, I think. I called the 1800 level, and then when the 1800 level hit, I said it could potentially go up to 2100. It stopped just before that, but you know, it's still going to go. It still has to go eventually, because for the same reason, now the economy fell apart in every single country. The economy is falling apart, and well, there's one country that's an exception, but you know, that's the exception, not the rule. And now we've got this coming down again, and you know, opportunities to buy. And when everyone starts working again and the economy strengthens, you know, saving now is more important than it ever was. So I still expect gold to go up to 2100 sometime soon. Whether it will first hit 1800, I doubt it. I mean, higher highs, lower lows, and higher highs, higher lows, you know, that's an uptrend. So, you know, something like that. I don't see it going below this blue line. Well, not this week anyway. Not next week either. So the next 2 weeks, this is still, in my opinion, a bearish market. So we'll see. We'll keep an eye on it. It's fun to see. Interestingly, dollar CAD on the short with this broker had a positive swap. So more. That's why I could potentially leave this indefinitely. Just profit from swaps. It's only 19 cents. I mean, it's not much, but still fun to see, because usually that's a negative. Like on the previous one, that was negative. -$2 on that. So anyway, Off topic. So that's it for my video. What did we say? Potential trades today. Oh yeah, Euro USD. We're gonna buy stop, sell stop, and let it run because it's gonna consolidate now. That's our trade. I think it's pretty straightforward. And then take profit there. If you want levels, let's do levels. And this one, see that doji there? That's your other take profit. Yeah, that's on the daily, so it's a pretty big move. We'll go H1 there. It's 80 pips down, just less than 100 pips up. It's a big move. And then obviously if you've got your, let's say we do a buy stop here. Do we have equity to do that? No, we don't. Pre-margin 1.8. Let's just see. Okay, I'm not. That's not the point. Let's put in the buy orders. It doesn't matter. Buy stop there. Let's just move it. Come on. We'll do it tight. Like if it breaks that level. Now this is obviously, be careful with this. This could literally open it right now, but this is closer to the monetary policy. You'll do it about 100 points away, something like that. And then another one there. Trading sell stop. 100 points away, so 250, you want it at 150. Keep moving this while it's consolidating. And then with this, you've got your take profit there. Sorry. Okay, so what you'll do is modify it that your take profit would be at that level, and then your stop loss would be at that level, and the opposite as well. So for the buy, you'll have take profit there, stop loss there. It's a pretty solid risk reward ratio. So from current price is 100 points. You'll put this in just before the monetary policy. You'll have 100-point movement as your potential trade opens. So your stop loss would be from where it opens to there. It's 200 points plus your spread, whatever your spread is. On the euro, it's usually about 2 pips. So it's you're looking at 22 pips stop loss versus, let's just do it roughly. This one, 87 profit, and to the downside at 75, I think. Yeah, give or take. 70, 77, 75. So yeah, 22 versus 75 is not a bad risk reward ratio. You want it at least 3 to 1, and that's what you get. Just move this. So you'll keep moving this. Don't actually put it in this early. I'm going to delete them both now. This is just to show you what I would do just before the meeting. Just before the meeting, I would do this. 100 points above ask and 100 points below bid. You put these in and let it do whatever it wants to do. And then just leave it. You've got your stop loss. Once it gets to that level, for example, you make your stop loss a break even. Similar to what we did here. We had the levels there and there. It went down. We let it. We're running with it. Let it go down and then move your stop loss every time. So now stop loss goes there. You see the exit rule? Stop loss goes there. Now our new profit is 294, which means if we hit our stop loss, we'd have made up that loss and then some, a little bit more. We'll actually be in profit overall again. So that's if we hit the stop loss. If we hit the take profit, we'll have significantly more than that. Oh wait, I can't not look at this. I need to close these. Luckily still a doji. Let me just close this out before. You'll do this just before the interest rate decision, just before. And you could put some trailing stops on them. So a pending order, you can add a trailing stop. So if you, let's say, have a buy stop there, right click it, trailing stop, and add it in whatever you want it to be. So maybe make it ATR. So that would be 142. For example, this is just me showing you stuff. Make it ATR, maybe 1.5 times ATR, whatever you want it to be. I don't care. That's up to you. So you could add a trailing stop in case it whipsaws, and you obviously add your take profit there and your stop loss there. It's a pending, so you can. So anyway, just delete that again. So that's how I trade today's news event, and that's how I trade non-farm payrolls as well. But non-farm payrolls, I add other levels, so I'll have this pivot indicator that gives you 3 levels. Now usually when it's like this, it goes to R2 and S2 and then comes back. You know, big move, it's one of those and comes back. But if they're closer together, like they were on this day, for example, it goes to 3. A big move could go all the way to 3 and then comes back. So that's the only addition I would do for non-farm payrolls, is add this and then base my trades on that. So not my trades, my exit rules. Now if the volatility is too much for this, too much for it to trigger fast enough, and you know you've only got a short move, then you need to keep an eye on it and obviously do it manually. So if it does consolidate beforehand, creates a bunch of dojis, and you have almost no movement in the market, that's ideal. That's what you want to see. Then you put those pendings in and let it go. Pending with a trailing stop is great. And you know, even if you have some slippage, that's fine. The trailing stop should still trigger, and you'll make a little profit there. So it's an easy way to trade a news event. If you have a consolidation like this before the event, and then you get the actual news, then just let it go, let it run. Anyway, that's it for today's video. I hope it helps. We're almost at our take profit here. I hope it helps. Good luck and enjoy.